This election cycle, investors have been anxious due to the unpredictability of this election's outcome. But now the mood seems to be changing. Joining us right now, special writer for the Wall Street Journal, Greg Zuckerman. Greg, good to see you. Thank you so much for joining us.
Great to be here.
So what are investors thinking right now? First off, to what do you attribute this big rally this morning?
A lot of it's just relief. We've had stocks and also debt, various junk bonds, etc., beaten down in the last few days, last week or so. Some people are just doing some bargain hunting this morning. I personally am looking a little bit more at the junk bond market, where you've had a lot of pain over the last week or so, and you're going to see a little bit of buying this morning, it seems like, but it still is sort of a sense that Trump has a better chance of winning than a good 10 days ago, so investors are pricing that in.
So you don't think that the Jim Comey announcement late yesterday changed what we were thinking last week, that Trump really had a shot?
Yeah, not dramatically. It's still a toss-up, according to most investors I talk to, most polls. Depends where Florida goes. It depends on some toss-up states.
Nate Silver's now saying that Mr. Trump is going to win Florida. You think that dramatically changes the race?
Nate Silver is really good, but he's been wrong often lately. So I listened to what he has to say, but it's not clear. It seems kind of close. And when you look at Brexit and a lot of the other polls, it's hard to figure out the polling lately and what's reliable, what's not. So, yeah, she probably has a better chance than Trump, but it's still too early.
But why would the market be so concerned about a Trump victory? With the Hillary Clinton victory, you know you're getting Elizabeth Warren in charge of our financial sector and in charge of our regulatory branch. So shouldn't that be scarier to the average investor?
It's not clear what Warren's influence, if any, will be on the administration. I think most investors worry about trade. We're big believers in trade on Wall Street, especially the Wall Street Journal, free trade.
Well, it's not like Hillary's pro-trade.
Right, but she hasn't been as negative as Donald has. There are some domestic reasons why you might think that Donald might be a little bit better, and the deficit will probably be hurt by both. So Wall Street is nervous in general.
And the unpredictability. I mean, Trump is the candidate that you just don't know.
Yeah, exactly.
You're making a bet on.
Also, you worry about, you want gridlock. If you're an investor, you kind of want gridlock. And if Hillary wins and the Republicans still control at least Congress, that's not bad for investors. That's kind of what they're rooting for. If you see kind of reports from Wall Street, you see people wanting gridlock.
Yeah, more of the same.
There's been $4 trillion moved into passive investing over the last 20 years. It's a 7,200% growth in passive investing. Is that a good idea for investors?
For the average investor, yes, especially in a low-growth environment, because if you're giving up a manager, giving 1% or more when it comes to a hedge fund, then it's a real headwind going against you. Unless you think that we're going to a down market, when you want to be hedged, you want to be active, you want a manager who has some cash or even some short positions as a hedge fund might.
But the hedge fund managers are just like mutual fund managers, frankly, just like stock pickers sitting at home, that you have good years, spectacular years, and awful years. John Paulson, who you wrote a book about, Greatest Trade Ever, and I mean, you can smell his performance from here at this point. He's had awful performance.
Yeah, it's been awful. To me, I give him some credit because he's got conviction, as you suggest. A lot of managers today just sort of hug the indexes and do what everybody else does and take their management fees. But you couldn't do worse than he's done lately, and it does raise questions about the ability of managers to outpick the market.
What was it you bet on?
I'm sorry, pharmaceutical stocks. So
right, which goes right to the election.
Yes, and Hillary. So if Donald Trump does win, he actually might get a little bit of a rebound. That whole sector, you want to be long if it looks like Donald's going to win. But he made a huge bet on pharmaceuticals, and some of the stocks are down 20–30%.
Well, if you think Hillary will win, though, you want to avoid those stocks? Avoid. Well, where are we in that? Because the idea that she's going to implement caps on drug prices really sends that group, biotechs and pharma, down sharply.
Yeah, that's exactly true. I mean, you could argue a lot of that's priced in, because if you look at biotech, look at some of these stocks like Mylan, they're down so much, 20–30% again, over the past year. A lot of that is people assuming that Hillary wins, and maybe that's priced in, you could argue.
Just some of the smartest investors in the world are using hedge funds. So what is the argument against hedge funds? Go ahead.
The argument against hedge funds? I would argue that it's hard to be a pretty efficient market. Market's not always efficient, but generally speaking, you don't want high fees in a low-growth environment. If you can get 2–3% global growth, then that's a real headwind. The argument for hedge funds, I would argue, is that you want to be in a hedge product when stocks are expensive and bonds are expensive, and they're really both expensive right now. So this is actually a pretty good environment for some hedge fund managers, I would argue.
So it just speaks for greater asset allocation, Maria. That's the point I'm trying to get to. Passive investing investing is a good tool, but you do need to hedge yourself, particularly when you're in cyclical and volatile markets and difficult political times.
Yeah, the hedge fund managers are still the best investors out there, partly because they get paid so much they're going to attract
Can you
the best
say that
talent.
again into camera, too?
Oh, yeah. I mean, some of the guys, David Tepper, other people, are the best investors out there. But there aren't as many as there used to be, and they don't outperform like they used to.
And investors are a lot more, I mean, they're really going to scrutinize that manager because not all the managers are the same.
Yeah.
Greg, good stuff. Thank you so much.
Sure thing.
Greg Zuckerman, Wall Street Journal. There's